G'day, welcome to the support and resistance module. Here we are to discuss and show how we look at support and resistance at different time frames. So this is pretty much an exercise. On my left you can see that we have an accumulation period where it's just pretty much low and price slowly builds up with momentum. So what I'm drawing is pretty much a trend line. Just rough guide and you can discuss this later, but right now we have a trend line that seems to act like resistance at the top, and we have support at the bottom. Now let's look at the ones that are already reassigned or assigned, sorry, in terms of support and resistance. So here we have a range that is acting as resistance on this 1 hour chart, and we have support on the 1 hour chart, and you can see this trend line also has confluence with this area as support. Moving on to the next one, in between the structure from the top to the bottom we have levels of support within, and usually we derive those through Fibonacci. So here we have a Fibonacci chart, and if we were to do a Fibonacci, you will see there's confluence with Fibonacci acting as support and resistance levels within that structure. So that's another method to work out support and resistance. Let's continue on. I would say that looking at these wicks, that is roughly, it's a rough guide. What do I say? That's a rough guide of support and resistance, or resistance. We have that point there. So we have 2 points, and you need at least 2 points to make a reference for a level. Three points is better. In this case, it's slightly higher, but we have this one here within the range, so that's acceptable. But this is not what we're going to take for a trading purpose. This is the maximum height. Let's continue on. Okay, so we've done that. Let's get rid of those lines. Okay, now let's look at the weekly chart. Actually, the daily, sorry. Looking at daily. On the daily, we'll use the body of the candle. So all those the body of the candle for all these resistance points becomes our resistance line. And you can see the confluence that it has when price drops and it does a rally back up. It uses the daily resistance in the previous price action as a means of selling. So people have used that as a reference point for selling. And so there was bears to sell there. Now, looking at that on the daily, it wouldn't surprise me that that's on the weekly as well. So let's look at the weekly chart. Let's put that daily back. Just need to make that visible for the weekly. There we go. Now let's look at the weekly chart. And you can see that had confluence. The weekly, if we measure the weekly resistance, we use the body of the candle right there, and you can see that that was equivalent to the daily. So this is why there was a big sell-off here, because there was this, on average, this would have been taken the line. Okay, moving more, we have resistance here. You can see the body of the candles on the daily. So roughly, we can take that as a resistance level, and right now we're having a breakthrough to the resistance. That's not to say the daily will close that way, but we have something in our favor, because basically we have pressure to the upside. That looks like a reversal because we have support along this trend line. So it would not surprise me that this price goes to the next resistance, and our next resistance on the daily is this level here. And if we were to use the Fibonacci, I'm sure there will be confluence at some level. Okay, so if we were to bring this up, use this wick, this probably makes more sense. And if we use the body of this candle, Doesn't. So that's the top. Yep, makes sense. And you can see that that previous daily resistance or support becomes historically a support level now in the future. So looking at it at a few different ways, we determine where support and resistance is. Using this Fibonacci, we have then a range for this target. So that will be a range for if this price was to come up, this range in this area will be our immediate resistance.